Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming at you with the market recap. It is Monday. It is the 13th of May. There was a fair amount of selling. Today might be putting it lightly. A happy belated Mother's Day to all of you mothers out there. I hope you had a fantastic and very stress-free Mother's Day here this past week. And welcome out, everybody. As always, great to see you guys. Hope everybody is doing well. Certainly better than the mood of the market, as China came out and kind of said, "Hey, we can raise some tariffs too," planning on tariffs on 60 billion worth of goods, a lot of agricultural type of goods that are set to go in effect in June. Whether they will or not, I guess time will tell. But I do think if we were thinking volatility was done, which we weren't, but if we were, that probably would make us believe, yeah, it probably isn't done. And hello, Scott. Hello, Micah. Hello, Tanner. Great to see you guys. As always, I hope you're doing well. And you hit it right on the head there, Tanner. I mean, it was red from the get-go. Everything really except for the utility sector really selling off pretty heavily. And hello there, Maria and Patricia. Great to see you. Happy belated Mother's Day to you both. So as you can kind of see here, and you don't need me to tell you, I know you guys were checking in on this. It was red, and there was lots of it. And it really kind of, for that pullback opportunity, on a positive note, we never really had reasons to believe to get into it. We didn't see any entry points or triggers, which is nice. But on the other side of it, if we were looking for it, today really messed up a lot of those pullback charts, I think probably across the board. So here we are in the S&P 500. I mean, gap down big on the open. And this is where always is kind of scary, from a purely technical point of view. We gapped right into that support level, right on the open. And we had to make a decision early, right? And we've seen, throughout the last, Thursday, Friday, we'd gap down and kind of drift a little bit before fighting back up the rest of the day. Well, here we kind of had that little drift to start the day, took out that little intraday support, and it was pretty much off to the races for the first half of the trading day. Good afternoon, Jasari. Great to see you, my friend. Did catch our footing, little bit of, I don't know if we call it buying activity, but I guess a little less selling activity the second half of the trading day. But we're in a pretty rough technical spot. The S&P still clinging to that 2,800 mark, which I think is a psychological number. Now we've cleanly closed that 50 after some weird stuff, but closing above it both Thursday and Friday. No such luck here today. We do have this old support zone and that nice round number at 2,800 on the S&P, which I think is what a lot of traders are going to be looking towards. I would tend to agree. I would call it a zone more than a specific number, just because of the history and the way it's behaved in that ballpark, over the last several months. But if that does give out, I mean, we are not looking at a lot of support for another 80 points or so down into that 27 and a quarter range in my mind. So this is a fairly important level of support. We've seen turnover on the short-term averages. Of course, we saw that last week. Unlike last week, though, now pretty much everything is below that 50-day moving average. And hey, Ed, great to see you, my friend. If we do get a little bit of a bounce, and that's certainly a possibility, I don't think we should expect it based off of today's candle, but support is support for a reason. We do have to now contend with that 50-day moving average as a potential resistance catalyst. We're going to continue to see that 90 MA continue to work down. The 20 is going to slowly but surely catch up to it. So now all of a sudden, lots of overhead. So I would expect that, even forgetting about the big news stories that are moving the market right now, just technically speaking, there's a lot more noise and a lot more stuff sitting on top of us from a market perspective than we've really had for the last little while, and that always makes for a little more of a bumpy ride. So I'll be keeping an eye on the 50 as kind of the first level of resistance until this 9 kind of catches up to us, whichever one happens first. Be looking at 28 as the support. I do expect if that gives out, they're just, I mean, anything can, you guys know this, can act as support, but I can't really see anything jumping out, say, oh yeah, I'd buy there, or anything like that. And hey, good morning, Lloyd, and hello, Amy. Good to see you. Hope you guys are doing well. So we're in an interesting spot, broadly speaking. Same thing with the Dow Jones. We're kind of hanging by a thread at this old support zone around 25.3. Which has, of course, been an old breakout point, a support level. We've got quite a bit of history here in my mind, closing below the 200-day moving average here today. Again, this could be a potential support catalyst if this gives out. Probably expect more selling going into this, into later into the week. Again, one of the scariest things, and it, of course, when things get moving fast, you go from just below the 50 to knocking on the door of support in a day and a half. There's not a lot of support, much like the S&P. There's still room. Yeah, hey, thanks, Nicholas. Yeah, I couldn't find my rubber band to make myself presentable today. I think I lost it at the gym. So and I didn't. I don't know where the rest of them are. So it is doing what it normally does, which is why I usually have a rubber band. It likes to do its own thing. So, but not a lot. I mean, there isn't a lot. Now, one thing that we can and probably should be just kind of keeping an eye on is this 20 SMA here on our weekly time frame. So, we're currently below it, and a break below that plus that support, that's a pretty bearish signal in my mind. On the S&P, we still have it kind of sitting right below that 28. So these are potential catalysts for at least a bounce, maybe not specifically a turnaround or anything like that. Maybe it is that, right? But they are some things that I think we can keep an eye on here. So it's tough to tell. I mean, basically what it always comes down to is things move down faster than they go up. And so while I don't think you can ever fully predict a V-shaped recovery, I do think when we start to see fear, and I think it's probably more coincidence, and again, who knows for sure if I'm right or not, but I think it's more coincidence that it had started happening here last week after we kind of V-shaped out here. Now, maybe that's not true. We did fight at resistance, right? I mean, that was a potential catalyst to push us down. But at this point in time, I'm just going to expect, fear, and volatility to remain kind of at the forefront until they go away, much like we talked about last week. When things get volatile, like it or not, assume they're going to stay volatile until they're done. And so, I don't really have a great answer because I think it's probably more on a case-by-case basis, in my opinion, at least. I hope that gives you something to think about, at least. Over in the NASDAQ, hit really hard here today. Again, things sitting on the 50-day moving average, lots of interesting pullbacks. And we're going to do a quick browse through a couple things today, just kind of recalibrate some watch lists before we get out of here. But before we get there, a lot of those pullbacks have been just completely obliterated. And so, to me at least, they're not pullbacks. You guys know I don't like deeper pullbacks. To the 50-day moving average is about as comfortable as I get. And even then, I prefer, much more shallow pullbacks where our short-term averages are not flip-flopped and moving down. Regardless of what I like, we are clearly back below that 50-day moving average here. So unlike last week where these, averages were holding, albeit interestingly, finding interesting ways to do it, it just was not happening here today. Support for me, at least over on the NASDAQ, that next level is going to be this low from back here. We've had a couple of tests right here around 72.40 as kind of that support zone. We could maybe put it into a zone between 72 at 100 and 72.40, and I wouldn't really argue too much if we were going to go about it on that side. Again, much like the S&P, now we have to worry about these moving averages completely turning against us, not much left working for us. Probably the ugliest today was the rut, after breaching that support on both on Thursday and Friday and hammering by the end of the day. Not happening here today. Very bearish candle here. I think the probably proper way to look at the rut, in my mind at least, is this was a failed breakout. And until I break below 1500, I'm going to kind of put it back into this sideways range that it spent for so much of this calendar year. So still very bearish candle. And I could understand the argument to want to go bearish on the rut. but I still think within the larger context of the rut and how it's kind of performed, we spent a lot of time in that range, right? 15 to 16. And I think for me, at least, yeah, it's definitely got a bearish bias right now. I don't think you can really paint the picture any other way, but I am kind of putting it back into this 15 by 16 approximately trading range that we spent much of this year and even a good chunk of last year, last fall, during the selling, as is kind of how I'm going to be viewing the rut. But however you want to spin it, whatever you're liking or not liking, lots of selling here today. Volatility is not going away. We are in that environment, and who knows what happens this morning if the no new tariffs from China. But that's the environment that we're in. That news can, it can beat technicals, right? Technicals, Coach Mark says it a lot, and I agree with him. The biggest enemy to any technical analysis is volatility, is news and stuff like that. That can break support, break trend lines, things like that, easier, in my opinion, than just about anything. And so we are in that environment. For how much longer? I don't know. I wish I did, and I would tell you. For me, I'm still kind of overall looking at this environment as a great place for credit spreads. Last week, that was kind of my thought process. Although in hindsight, maybe should have went more directional, bearish. I was seeing better credits than I've seen in quite some time. And while I think you have to, when all of the averages are closing below the 50, what you want or don't want is irrelevant. I think you have to skew to the bearish side as long as that is the case. I'm still looking primarily to credits, for the most part, although there's a lot of interesting breakdown candidates out there right now. And that's a great thing. If the market wants to hold support, there are still going to be bullish opportunities. There still are bearish opportunities, things hanging at support or just broke through support levels here today. So lots and lots of selling, as if you needed me to tell you that, right? So, of course, we're going to see very similar situation over in the sectors. Closing below that support level again here today. You have to, I think, look at this even more bearish than maybe the broad market because of that failure at that support level below everything. Now, we do have a potential support zone in my mind here at about this $53 mark, an old support, old breakout point, recent support bounces and things like that. So we have seen some activity around 53 on the ETF, but right now things are breaking way too much support. I have a hard time looking at this as anything other than, this was important. We talked about it Friday, and I still believe it's true. And how we got there, I might have my opinions, but the reality is we did get there. And as long as we're below this 54.25 mark, I think we have to be really careful from a bullish perspective and be skewing to the bearish side overall within this sector. Energy just kind of hanging around, knocking on that door of that 63. Again, probably depending on your rules, it's either broke it or not by enough. And so we're 5 cents below it, little more carry through tomorrow. Then I will be on board of support breaking. But right now, that's not enough to get me to say that has broken down. Now, do I think it's going to, especially if the market sells? Yes, I absolutely do think that. But we haven't broken yet. So we are still, well, at least in my opinion, we haven't broken yet, but we are very close. If we take out today's low, I think that can be a confirmation point that this has broken down. The big question is if we're looking for new trades to the bearish side on that potential breakdown, are we concerned about this old 62? We don't have a lot of history at that 62. We talked about it, when we were falling, in the fall. We don't have a lot, but the little bit that we have is major. That was a major turnaround point. And so whether we're looking at entering, a break to the downside of 63 or approximately 63, or if we're, I think I need to wait and see. I do think we need to keep an eye on that 62 marker. Like I said, it's not that we've had a ton of history there. It's just the history that we've had has been fairly significant, at least in my mind. So I'll definitely be keeping an eye on 62. If we give out here, I don't expect it to put up much of a fight on the way to 62, but that one could be an interesting one just based off of the short but powerful history that we have there. Financials caught up with the rest of the market, would look like a pullback potentially on Friday, get me back above that 27.50. Now we are flat back down. We did, kind of hold up above some of those other averages, maybe a little bit better than certain other areas, but at the end of the day, still a fairly choppy and not very bullish looking chart any longer. Let's let it simmer down. Some of the companies within this space are looking appealing to me if I'm looking at this as a pullback, which again, there are still pullbacks out there. It's just, in my opinion, not broad anymore. Whereas I think we could at least made that argument on Friday. Could be an area that when I do start to see some upward movement in the market, although I probably won't expect it's going to take us back to the tops, could be an area that could tempt me from a bullish point of view. As of today, still no bullish movement, so that can't happen at least until Wednesday. Need to see some sort of bullish activity before I'm on the buying side. If I'm looking at it from a seller's point of view, don't really have a lot of support until we get into this 2620 range. Now, we do have quite a bit of history at 2620, and so that is a support zone that I think we should kind of be keeping an eye on one way or the other, but there still is room to the downside within this sector. If the market wants to continue, there's not a lot of great things to prop it up here. We do have, some highs that maybe we could start to debate, but they were, short-term type of things. So next support level for me is going to be down at 2620 over in the financials. Industrials catching its footing here today at the 200-day moving average. I think this area is one of those areas that, again, it's hard to say anything too positive about much of anything today unless it's the utility sector. But for me, until we give out this support with as close as we are, the 73 support zone, which in my mind does matter quite a bit, not really looking to build overall bearish into this sector. That is a decent support zone, in my opinion, tested on a few different occasions. Below that, there's room to the downside. And so this is one of those areas that if we do continue to sell, maybe later in the week or early next week, is looking more appealing. Although with as volatile as the market is, I mean, we could be talking at 72, 75 tomorrow, right? Clean close below that. But I'm going to need to see that break overall. There are other things that are showing more weakness, at least across the board in my mind. And that is a decent level of support. But you have to be concerned. I mean, we talked a little bit about it. It's kind of weird looking, but we did have a little left shoulder here, little head here, little right shoulder here. Breaking down below that's hard to say that's a positive thing, but creating new entries this close to a support zone, at least bearish entries this close to a support zone, feels pretty uncomfortable to me. So I want to see this play out before I get too excited one way or another. Tech rough day. We saw the NASDAQ, and no surprise, when things really were selling and fear really was winning, because we saw fear rear its head last week, but it really didn't win at least every single day. Right here today, I mean, fear won. There's no doubt about that. Clearly putting us below that. Now, there may still be some interesting companies in this space, but violating that 50, much like the broad market, is going to turn so many of those into more trouble, in my opinion, than they are worth. Support-wise, looking at 72. We were looking at 72 as a pretty important resistance level not all that long ago, right? Seems crazy that it was in March that we were, looking for that, and really think that that's probably the next support zone. So there's still some room to the downside of this. If the bears want this one, this break, was a fairly big win for the bears. There's room in most of the sectors to work before they start testing support levels. It might not be a tremendous amount of room, but it is room to the downside. 72 will be the support zone for me over in the technology sector. Again, anything that finds itself cleanly closing below that 50 today, that's probably going to be the first level of resistance that I'm going to be keeping an eye on. Certainly the case with the technology sector. Now, we did hold up a little bit better with the staples, a little bit, again, kind of one of those somewhere between middle of the pack to more defensive type of sectors. Held up a little better today than certainly other areas in the market. So again, if I see some upward movement in the market, I think that's key. We need to see some upward movement in the market before we look to buy. And if I do, this could be an area. And I will remain at least cautiously bullish on this area for the very least, as long as we're above this old resistance support that we've now tested on 2 separate occasions at approximately 56 and a quarter. If that gives out, would have to call that a bearish signal. I would be a little bit concerned that the 50 could prop us up. And a lot of it will depend. If we have 3 more days of 3% down days, well, it's hard to imagine the staple sector is not breaking support, or anything that's still holding support isn't. So I think we want to be careful. But I do think this is an area that could be a little more tempting to me from a buyer's perspective if and when I start to see some upward movement in the overall market. Above anything back above resistance, I'll call a bullish signal. I think right now let's be cautious, let's let it play out. But anything getting us back on the right side of that 57, I will call that a bullish signal personally in this sector. Big winner, and really only winner today, was the utility sector. Again, we looked at the doji on Thursday. We said we should have bought it on Friday, and we should have bought it today. Now we're knocking on the door of resistance, of course, and certainly a defensive area leading into the potential breakout. All of a sudden, we've worked from support back almost to resistance here in a very, very short time period. Now we do, I believe, have to respect that 59 level of resistance. This is been sideways for a while, right? The last 2 days have done nothing to change that. They've been very strong days for the bulls. And if we continue to live in a little bit of fear, money keeps going into defensive sectors, I would expect the utility sector will try to break through that resistance, but you haven't broke it until you've broken it. So I do think we want to keep an eye on that 59, but there are some interesting stocks out there in this space. Crazy, we go from support to resistance in basically 2 trading days, but things are looking, interesting. And all of a sudden, we looked at a couple, sometime last week, I think things were hanging right at support. Now all of a sudden, knee threatening to break resistance. You have a Duke Energy here. Okay, well, they didn't really get in on the action. They rallied the last couple of days, but not looking all that hot. But, Dominion, not so much. I think SO actually hit a new high today. Yeah, but they actually broke out here today. EXC, I think they were knocking on the door too. No, it was one of the other EXs. AEP, though, was knocking on the door, challenging resistance. So just like that, we're seeing some potential breakout candidates over in the utility sector. I think we should respect that resistance, because I always think that. But if we do continue to see, money move into the more defensive mindset, could be an area worth keeping an eye on. And beyond that, again, a sideways range for now, what has turned out to be a couple of months in a long-term upward trend, that's a pretty good signal, regardless of what's kind of going on around us, right? At least technically speaking. So above 59, I think, would be a nice bullish signal. Just think we need to be mindful until that actually happens. Over in healthcare, much like the rest of the market, not really having too great of a day, kind of hanging on that low from Friday. We had that weird, really weird long candle on Friday. The whole market had those big shadows on Friday, but we really had one here on the healthcare sector. I think you could at least start to make an argument with us testing that low again here today, that a break below that could be another bearish signal. Don't really have a lot of support until we get into this old range at around 85.50. Of course, what's kind of been keeping me away overall from this sector has been, kind of what we saw the close of 2 weeks ago and then last week's candle. But this would be taking out that low too. So if I was just looking at this as a bearish retracement, it's not perfect by any means. I still think it's a little uglier than we want it to be. But if we do take out the low of this doji candle, I think you could at least make an argument that independently that's a decent little sell signal. Of course, factoring in the broader selling of the market could play a part too, without really a lot of support for a little ways to go. So I think we have a little more clarity. Again, this is one of those areas. Ideally, we kind of go sideways and hold this floor for the rest of the week and then break down next week. But that, at this point in time, probably asking way too much. On the resistance side of things, I think we probably go back to using this same 89 area that we were using 2 weeks ago, 3 weeks ago. That puts us, right at that old support level. Right now, I think we have to call this a failure until proven otherwise. So this one's a little tricky. I still don't like this really as a bull or a bear. I will be very cautious within this sector until I feel like there's a little better clarity on it. But I do think at least building a 2-day floor gives us something to start working with. Although 2 days is not a whole lot of time, it's a lot more than one, twice as much as one, as a matter of fact. Over in discretionary, more selling here today, giving out of the 50-day moving average as well. We watched this 112 as a breakout point not too long ago. That will be where my first support level is on this sector. 50-day moving average is resistance. We get back above the 50, we can start talking. And it's not just in this sector, but it's on things that look like this. But that means it has to have that first swing effectively without me, right? Because I'm not the guy that's going to get us above the 50. So that will be my first resistance catalyst. Expect, just like the broad market, the 9 to continue to fall to potentially act as a short-term resistance catalyst as well. Over on the weekly, let's come back to this one more time. The one thing we do want to keep in mind is some of these weeklies and these weekly 20s can be important. There's room for things to sell off a little bit more into those, but let's keep an eye on those if we get a little bit closer to them. Now, on the case of the discretionary sector, that's lining up really nicely with that 112. That should be a lot of support. That was, in my opinion, we talked a lot about it, a pretty good breakout. We saw great movement off of it. So there's price action history here. The 20 weekly could be a catalyst as well. So that's an interesting area if and when we get there. Could be something that's at least worth peeking at. But we have a little ways to go before we get to that point. Over in real estate, not really getting in, basically closing even here today. All the defensive money going into the utility sector here today, continuing to knock on the same door of just above $36 that we've seen time and time again. Really, for me, not a whole lot has changed. Still looking at it as more neutral than anything else. But again, if we're seeing more money come into these defensive sectors, maybe that could be enough to push us out of this range. Well, we've talked about this a lot. It's not as pretty or maybe easy to identify as the range that we've seen on utilities. I believe that's exactly what we find ourselves in. I think it's a little easier sometimes if on those type of charts to say that. We talked a lot. If you're buying the pullback, you bought it, back when it pulled back, right? You're here already. There is a case to be made, though. If we can take out these highs, there's room to run to the upside, with that being our all-time high there at this most recent swing high. So still neutral with a slice of bullish, I think, is the way that I'll look at it. But really, again, I'm not really looking to jump into things just because they're defensive. And so if I get some clean signals, then we can talk. And lastly, over communication services, another one. This is going to be kind of a tough chart. We all know the story here. Too new, too heavily reliant on Facebook and Google. But we did close below the 50 here today. We do have a little bit of price action here at this 47.50 area, but probably not enough to say that, yeah, this is a big deal. Probably better to be looking at that 200, but probably even better to be looking at our Facebook and our Google components. A little bit of room to go to the 50-day moving average over here on Facebook, right? And this was the nice thing about this market. I don't know about you guys, but as I've been looking at potential bulls, they've just really, from last week all the way into today, just the triggers have just never been there, which is nice, because had they been there, well, it still would have sold off and stop losses would have been hit in pretty good numbers. Google's probably the rough one, though. This is a pretty rough looking chart here. Clean close below the 200-day moving average. There's a lot of things, that could act as support. Round numbers. We've been at all these prices before, but after the earnings gap, this is a pretty ugly looking chart independent of the market. A little bit concerns how this is going to impact this ETF. As we all know, it doesn't necessarily need Google working with it or Facebook working with it, but it's really difficult when they're pulling one way and the rest of the space is trying to pull the other. So still won't be really looking at this as a vehicle, as a potential trading vehicle. And again, right now, at least technically, I know that's just me. Not everybody feels that way. So again, much like pretty much everything, get me right on the right end of that 50, and then we can start talking from a bullish point of view. But this is, again, one of those more aggressive areas. So if we continue to see selling, we probably should see heavier selling in here than, say, some of the other sectors out there. So I mean, it wasn't pretty. There's really no way to put it. It was definitely plenty of selling today. No reason based off of the technicals to believe that tomorrow has to be the day that buyers come back in. With that being said, when we're in these volatile markets, and those of you, and I know most of you guys were around trading back last fall in the sell-off, any given day could be a huge bullish day, right? We're seeing huge bullish days any given day, but the bears just ultimately kept winning. And so when we're in this type of environment, I think we have to expect that. We can see pretty big movement top to bottom. We've seen it, for a week now, right? Sometimes it's easier to see, it's a giant red candle or something like that, but we've been seeing it. So I do expect volatility to continue to be here. Speaking of volatility, we laughed at it for dropping 16% on Friday. This makes a lot more sense, going up 28% here today. Volatility is high. It is high. There's no two ways about it. Again, could it start dying tomorrow? Sure. Could a trade deal be done tomorrow? I guess it's possible. Probably shouldn't expect that to be the case. Again, that is opening up the door for much better credits than we have been getting for quite some time. And so for the bulls, at least the credits are there right now, right? And that's always a positive thing. Overall, I'm continuing to look at credit spreads as my favorite way to trade. And that usually is the case when things get really volatile. Not only am I getting bigger credits, but I can send them way out of the money and not have to worry quite as much, at least in theory, about the day-to-day volatility. That's kind of the approach I've been taking, and at least for the time being, continue to take, primarily speaking. Over in the dollar, another bounce, test of that 50, broke on the intraday, but a pretty decent close. That's a pretty decent candle stick from a bullish point of view. I can't get on board with the pullback, and you guys know me. I'm waiting for it to break the tops up here to confirm that was a breakout. I believe that it was, but I do not believe that it has been confirmed. And so this pullback for me is not interesting in the slightest. Sure, there's going to be things on the intraday that could be very interesting, but right now, not really great. But that's just me. I mean, I'm not afraid to try to look at it from the other side of things. And it's just Monday, right? Things can go a lot of ways between now and Friday, but we have kind of seen a little bit of slowdown here on the candlesticks. Could look like a pullback sitting on that 9-weekly EMA to traders more inclined to be looking at going bullish on a pullback here on the dollar. I'm not one of them. You guys know me. I want to get back above those bodies of the candles on the breakout to give that the confirmation for a potential swing trade. That's where it could get interesting. Speaking of interesting, a lot of selling in a lot of fear, a lot of actual fear today. Definitely helped gold, right? Certainly, it's not been the safe haven that maybe sometime that maybe it has been in the past. But when things were really getting scary, folks were not afraid to jump right back into it. There's some pretty interesting signals here on gold for the first time in a little while, in my opinion, at least. Cleanly closing above the 50-day moving average. Probably more importantly, cleanly closing above this downward trend line that has been holding, since we peaked out, right? And so I don't think that this is going to be something that makes me want to jump in and buy some gold here tomorrow. I'm now starting to be open to it. I'll be looking at the combination of this old resistance, this 1290, which we've watched be a big deal for the last few weeks, along with this actual trend line itself to kind of be the line in the stand for me. So if something is to develop, little 3-day pullback or something like that, or probably better, little 3-day consolidation, then a break, I could, for the first time in a while, be interested in gold from a bullish point of view. And I do think we want to kind of make sure that we do take out that 1300 area. We've used that 13 as a number, and I think that's fair to do, but I think we want to make sure we're above that unless some sort of a pullback opportunity develops over the next week and a half or something like that. But I do think you have to call this a bullish signal, even if you're not interested in trading it. We are now above the 50. We've now broken that trend line. You could argue it's not pretty, but you could argue that this is a double bottom and a break, a confirmed break here today. We now are above these short-term averages. At the very least, let's wait until we fall below that 9 if we're looking bearish. But this is a pretty interesting chart, I think. Just need a little bit of time. I'm not the type of person that's going to run in, but I would absolutely call that a bullish signal personally over in gold. Silver, not so much. So silver not getting in on the action. Did come off of the lows pretty nicely here today, but still, as long as we're below 15, I've said probably too many times, can't get the bullish argument as long as we're below that 15. I can understand if you're not bearish with just the way it's behaved. I'd have really no objection to that. But from a bullish buy side, below 15, I can't get behind it right now. Certainly did not benefit from from the selling the way that gold did here today. Still continuing to use that 9 EMA as its resistance, at least as of right now. So much weaker chart in my opinion than gold at this point in time. Over natural gas, was able to not gap down, which is probably the most important thing for natural gas on the open. Now it's it's in a weird spot, right? We're still, I think you could still argue we haven't broke resistance on anything other than the intraday, and I think that'd be fair to me. I wouldn't want to trade this, but I think again just another little bit of a bullish signal. Now that 50 sitting on top of us and this 9 weekly sitting on top of us are definitely going to be things that we've got to keep an eye on. That's why I don't think there's any real bullish opportunity here. But I don't think, and again, I've kind of felt this for a while, and nothing really has changed too much. But this pushing through here today, a close would have made me feel a little bit better. But this is a tough fight. We've got that, we've a ton of negative momentum, right? We've got that 50-day moving average. We have this recent swing. We have that 9 weekly moving average, all kind of sitting on top of us. Whereas we do have a little bit of upward momentum on the daily chart. We're coming off of that long-term support zone on a weekly chart, or really any time frame, but at approximately 250. So in a very interesting spot. Still think it's too early. I still lean a little more bullish than bearish on it personally, but I still think it's too early to try to trade anything. If we can kind of get back, and this probably means I need a week, but if we can get above these averages, if we can close above that 50 and that 9 weekly, I might actually be interested. That's, again, a lot of things can happen in the next week, and so we'll see where this one takes us. On a support side of things, of course, down here at this support level right here, probably the first line in the sand for me, at least, from turning a little more bearish. But again, I don't really understand being bearish until you're sold on this break, and you might be. If you're sold on this break, this pullback is still very much intact on a weekly time frame. So you're probably looking for selling opportunities. I just do not believe that was a confirmed break for better or worse. So far for better, because I do like that as a signal once it finally breaks. But a week, 2 weeks from now, I could be definitely saying for worse. So, and lastly, over on crude, really tried to run here today, ran right into that 20 SMA, and then completely sold off. Kind of messing with all of the work. Well, none of us really did the work, but we were cheering for it that we put in yesterday. Now there's still a lot of week, right? But right now we have created on this weekly a higher high and a higher low. One thing that's going to do is let me know that if this 60 does give out, probably should expect more selling. I've been at least open to the idea of bear below 60, even though I've been looking bull on the pullback. But I would feel a little bit better about it with the upward movement that we saw. From the bullish side, this kind of messes it up a little bit. We almost kind of need to recalibrate for a few days, kind of get back into this range, and then get a nice clean break above it, I think, before we get into it. So I don't think the pullback opportunity is dead yet. And as long as we're above 60, I really don't believe that. But I do think it took a little bit of a hit in the likelihood of it happening here today with the price action that we saw within just today's candle. So right now, still kind of on the wait and see. Below 60, is certainly a bearish signal in my mind, no doubt about that. On the price wise, it's really hard to say for sure. I mean, maybe you could say above 63, but what I was hoping, and I still may get, is that we get an entry to the buy side lower than that on the pullback. But as of today, I don't think that has developed. I think would need to be basically above today's high, which would make it very unappealing from a risk to reward. So hopefully if it wants to pull back, it kind of recalibrates a little bit, and spend a couple more days in this range. Because if it runs tomorrow, I don't really think that's a good signal with or without me. So, ladies and gentlemen, that is where we find ourselves. Certainly was not a dull day in the market. A lot of selling. The fear is here until it is not. We need to make sure that we're following rules, not chasing things. There's great opportunities, right? There's lots of great bearish opportunities. There's even some good bullish opportunities out there floating around. Really quick before I wrap up, just kind of want to really quick kind of walk through kind of just a few of the stocks, maybe a couple of the areas in the week's watch list, just to kind of talk a little bit about kind of how you might change your approach. So on things like breakdowns, they're still very much in play. If the risk to reward is still in play, you have Albi here, had broken down, really had violated support last 3 trading days, but a nice clean close. So your breakdowns are still very much in play. Some of your retracements, like a COG here, I think they were in either the stock or the options report, are still very much in play. Some of the pullbacks, Hess was kind of on the pullback side of things, could still be in play, but they're going to need more movement. Again, for me, you may not agree with any of this, and that's okay. I never want you to agree with me just because, but kind of just want to talk through the thought process with you. There's still some potential here, right? I threw a few stocks that were holding up on their 50-day moving averages up on the Tackle Trading Twitter today, like DHI was one of them. These things, the pullbacks they don't really look any different than they did on Friday. Right, I guess is the way that I'm going to be looking at it. If I was looking at this today versus Friday, basically I'm looking at it trying to hold up on the 50-day moving average. I don't think anything has changed. So there will still be some pullbacks that kind of fit the bill on that side of things. A lot of things did break down here today, but not all of them. There still will be potential breaks, that haven't happened yet. Trying to see if we can still find some pullback opportunities. So XEC here still hasn't broken to the downside. So if there's more selling on the other side of things, there's still kind of held up on the pullback here today on something like a CL, where it's still creeping up, still holding all of the trend lines, holding the moving averages. Little bit of upward movement. These are the type of things, not trying to say that you should buy CL, of course, but these are the type of things I might be interested if I start to see the bulls come back in, things that have held up. May or may not be CL, but things that have held up. I'm not going to try to guess the bottom on old Croxy here. That seems like a rough go. So there's still going to be things out there. A lot of things, you got to get back on the right side of the 50. So as you're going through your watch list, if the pullback's no longer there, don't be afraid to kick it out, right? There will be other opportunities. There are still things that, at least to me, look like things that I could buy if I see some upward movement in the market. Still have breakout candidates like on old Ford here. We're a ways away, and right now I don't have high hopes that it's going to break out this week. That doesn't mean it couldn't. That doesn't mean I wouldn't like to at least debate, do I want to trade it if and when it does. You have things like FBHS, Fortune Brands here, that have kind of still sitting on its, old breakout points. Got a lot of history here, as you can kind of see, sitting on top of its 20-day moving average. Turnaround candle? Absolutely not. So that could change things dramatically tomorrow with a big candle or a break below this zone. But there are still things out there. But don't be afraid to kind of work through your watch list. And if it doesn't look like the pattern you were following, or that you liked on Friday or this weekend when you found it, don't be afraid to send it packing. Right? There's no shame whatsoever in that. There's still going to be things out there. There's still breakout candidates on General Mills and things like that. So there's still plenty of things. Breakdown candidates like on old TAP here, kind of close below support for a few days on an earnings miss. Could potentially, see some downward movement, put a little 3-day floor in. So there's still going to be opportunities out there for us, whether we're looking at buying or selling. You guys know me, generally I'm open to both, but from a buyer, I want to start to see something show in the broad market before I get too excited. And yeah, Lewis, we did look at gold. Hopefully that gives you some ideas, guys, of just kind of reevaluating. This one was, had to move the entry, from here to here today. So we we'll have to readjust our entries on some of them. Others are just not going to look appealing anymore. A lot of the pullbacks that looked good, to me at least, now look yucky. And so I don't want anything to do with them. And yeah, Lewis, we did go over to gold, but long story short here, we did see, in my opinion, at least a pretty decent bullish signal closing above this trend line, first and foremost, closing above that 50-period moving average here today. I don't think it's the type of thing I'm going to want to jump in tomorrow, but I do think we have to call this a bullish signal. One of these candles, and these candles can be pretty powerful. And again, it's Monday, so we have to take this with a grain of salt because a lot can happen. But if this was the closing candlestick of the week, if we're talking and it's Friday, we broke above both the 9 and the 20 weekly and gobbled both of them up along with that trend line, that's pretty bullish in my opinion. Now, a lot can happen between now and Friday, so let's keep that in mind on this weekly candlestick, right? But for me, this is definitely for the first time in a while, I'm open to buying gold, Lewis. Am I going to do it tomorrow? No, I am not. I don't foresee that being a scenario that happens that would get me to do that. But if I were to consolidate or have a little bit of a pullback, let this 9 EMA catch me back up and then push me through that resistance zone, I could absolutely be interested if something develops. I do think that this was a bullish signal on gold. Just don't think I need to be the first one into it. And of course, for support, I'm going to be looking down at these old highs here at just below 1290 that we've kind of fought with for the last month or so. So hopefully that makes sense. We talked a little bit more about it just probably about 10 minutes or so ago, Lewis. So if you want to check the recording, you can. But hopefully that gives you a bird's eye view there. And you're very welcome, Six. Ladies and gentlemen, as always, it is my pleasure. Thanks for going through this with me. It's definitely more fun with you guys than by myself. Certainly on days like today, when sometimes you think, oh, is the market just going to sell? Is it ever going to stop? It seemed like it was one of those days. Is it ever going to stop? As we were kind of working into about 10 o'clock or so my time, 10:30, it just kept going and going and going. So thank you for joining me here today. As always, guys, it is my pleasure. Appreciate your time. If you're new around here, be sure to subscribe to the channel, hit that notification bell. Join us over on Twitter at Tackle Trading. You, of course, can find me at FrankMartin23 on Twitter as well. Threw up a few interesting charts over on the Tackle Twitter here today. If you haven't had a chance to check it out, I'd go see if anything kind of jumps out to you. They were interesting to me. That's the beauty of charts. Sometimes they're interesting to you and not somebody else, but sometimes you really all like them. So you're very welcome, Ed, Micah, Tanner, Amy. Always a pleasure, guys. Thank you so much for your time. Guys, get out of here. I'll be doing our onboarding webinar with our new Team Tackle members here in a little bit here at 8:30 Eastern. So looking forward to always fun to meet new team members. So that's what I'll be doing here this evening. You guys have a fantastic Monday afternoon. Be ready for tomorrow. Be ready for the volatility to continue because that's probably the world that we find ourselves in, at least for the time being. We'll see if any tweets get out there between now and when we wake up. Check those futures in the morning, right? See what's going on. So thank you so much, ladies and gentlemen. Get out of here. Have a fantastic Monday afternoon. I'll see you same time channel here tomorrow. Bye, everybody.